Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. If you're serious about mastering Forex trading, then you are in the right place, okay? In this video, we're just going to be talking about the Double Three Elliott Wave, all right? The Double Three Elliott Wave. Basically, it is a pattern that many traders overlook but can have a huge impact on your trading success. All right. So this pattern is actually part of the Elliott wave theory. And while it might seem complex at first, I'm going to break it down so you can start spotting it in your charts and use it to your advantage. All right. So if you find this video helpful, make sure to hit the like button and subscribe for more trading insights. So let's just quickly dive right in. First of all, let us start with a quick overview of what the Double Three Elliott Wave pattern actually is. Now, it's a correction pattern within the Elliott Wave theory, all right, which means that it doesn't signal the start of a trend, but rather a corrective phase within an existing trend. Now, this pattern is made up of two distinct corrective waves, each of which is labeled as a three-wave structure, hence the name Double Three. All right, so you can see where the name Double Three came from. So you are essentially seeing two sets of three-wave moves that alternate between a zigzag and a flat or triangle correction. Now, the main idea here is that this pattern typically shows up when the market is in a consolidation phase. Okay, so most of the times, if you want to find the double three Elliott wave is usually in a consolidation phase. Okay, that is when the pattern shows up. All right, it gives you the opportunity to identify a potential reversal or continuation. Now, let's just quickly break it down a little more. Okay, the structure of the Double Three Elliott wave consists of three main parts. All right, it consists of three main parts. We're just going to be looking at them one after the other. Now, the first is the first correction. All right, the first correction. So, in such scenario, you are just going to see you're going to see let's just see, I'm trying to see if we can find a very good example. Trying to see if we can find a good example. Okay. So I think we can use this as an example. All right. So the first correction in this Double Three Elliott wave, uh, it is the first pattern which is labeled W. All right, the first pattern labeled W, right? Okay, and this typically is a zigzag or a sharp correction, right? It's typically a zigzag or a sharp correction, meaning that we are going to be seeing a sharp retracement in the price action after the previous move. You can see that we had a previous bullish move, right? And now we are having a retracement. Okay, we're having a sharp correction after the previous move. All right, now following this W pattern, we have the second correction, which is labeled X. All right, we have the second part, which is labeled X. Okay, And this one can be sometimes, can sometimes be a smaller corrective wave or even a simple sideways movement, right? It could even be a simple sideways movement or a smaller corrective wave, as you can see, compared to this initial wave. You can see this is even a smaller corrective wave. All right, it essentially acts as a temporary pause or a continuation of the market before the second correction starts. And now finally, the third correction, which is labeled Y, right? The third correction, which is labeled Y. Now, this is not exactly a perfect double three Elliott wave pattern. All right, it is not. Okay, it's just that I had to use something close, right? I had to use something close because there are some of these patterns that do not always show up in the market, right? This is a live chart, and it's not something that you might always find readily available on the chart. So but based on the explanation, I think you are going to be able to get it properly. Okay, so just note that you have zigzag movements, right? You have zigzag movements, and the double three Elliott wave usually occurs, between it usually occurs within a consolidation phase, right? It occurs within a consolidation phase. Okay, so let's quickly go to the third correction, right, which is labeled Y. So like the W wave, right? Like the W, this is also a corrective move that will typically be a zigzag or flat structure, right? So ideally we ought to see a zigzag movement here. That's why I said that this is not a perfect double three Elliott wave, because there ought to be a zigzag, but you can see that there was no zigzag exactly here. But just for the sake of clarity, right? There ought to be a zigzag. Okay. So after you have found the zigzag, or it could be a flat structure, it's going to complete the double correction cycle. Okay. Now, once this Y wave is completed, then you will often see a strong move in the opposite direction. And you can see, you see a strong move in the opposite direction. That concludes the end of, or rather, that forms the end of the consolidation phase. Okay. So how do we spot this pattern in our charts? Well, the key is to look for two corrective phases that alternate in the way I described earlier. All right. First, you'll notice the W wave, which will typically look like a sharp retracement or a zigzag formation, followed by the X wave, which is often a smaller sideways correction or a shadow pullback. Then after that, you'll see the Y wave, which is the final corrective move. What makes this pattern especially useful in Forex trading is its ability to help you predict the next big move in the market. Since the double three is a corrective pattern, it often indicates that the market is preparing to make a significant directional move once the pattern completes. Okay, so one thing to note is that the double three Elliott wave is most often seen in markets that are in a consolidation phase. So you won't typically see it in trending markets. All right, take note of that. So if you are looking for it, you will want to focus on areas of the chart where price seems to be moving sideways or consolidating, rather than in a clear uptrend or downtrend. Now that we know how to identify the double three, let's talk about how to use it in your trading strategy. The key takeaway is that the pattern indicates a pause in the current trend. So once the pattern completes, you can anticipate a breakout or a reversal. Now, this is particularly useful when trading Forex, where trends can often take a sudden turn after a period of consolidation, like what we can see happen around here, right? Now, when you see the double three pattern forming, you can use it to set up potential trade entries. For example, once the Y wave completes, you can look for confirmation signals like a break of support, or break of resistance levels, momentum indicators, or candlestick patterns that signal the market is ready to resume its previous trend or reverse. Okay, now before we wrap things up, here are a few quick tips for trading the double three Elliott wave. The first is patience. All right, patience is key. this pattern can take some time to form, right? And that is the reason why, looking for the pattern on, on the charts can be, quite a deal, right? So it takes time to form. So if you want to trade based on this pattern, then, well, you might not exactly be trading every day. So you shouldn't just, create a strategy around this pattern alone, okay? Now you have to wait for the pattern to fully develop before making any moves. Now, apart from that, you also have to pay attention to confirmation, right? While the double three Elliott wave is a great pattern, it's always best to wait for confirmation through other technical indicators for or price action. All right, pay attention to your price action and pay attention to any indicator of your choice actually that you want to use as confirmation tool. And then finally, make sure you observe good risk management. As with any trading strategy, make sure you have a solid risk management plan in place. The markets can be unpredictable, and using stop loss orders can help protect your account. All right, so that is it for this breakdown of the double three Elliott wave. I hope this helps you better understand how to use this powerful pattern in your forex trading. If you've found this video helpful, please hit the like button and subscribe so you never miss out on more valuable trading tips. Let me know in the comments if you spotted the double three in your own charts and how it has worked for you. In the meantime, thank you for watching, and I hope to see you in the next video.